The Rules Committee will come to order. We're here for consideration of two measures, H.R. 830, the FHA Refinance Program Termination Act, and H.R. 836, the Emergency Mortgage Relief Program Termination Act. We're happy to welcome our good friend from the Committee on Financial Services, representing Chairman Baucus, and I think Mr. Frank is scheduled to be here as well, and Mr. Cardoza. But we'll begin with you. Oh, he will. Okay, then we'll begin with Ms. Biggert, and if you have prepared remarks, they will, without objection, they will appear in the record in their entirety, and we welcome your summary. So thanks and welcome.
Thank you, Mr. Chairman, and members of the committee. Last week, the Committee on Financial Services considered and approved two bills, H.R. 830, the FHA Refinance Program Termination Act, and H.R. 836, the Emergency Mortgage Relief Program Termination Act. And I'm here to request that the Committee on Rules grant a modified open rule with a pre-printing requirement for the consideration of each of these bills. In addition, I respectfully request that for H.R. 830, the Rules Committee grant a rule providing for 1 hour of general debate with the time to be equally divided between the majority and the minority of the Committee on Financial Services. I also respectfully request that for H.R. 836, the Rules Committee grant a rule providing for 1 hour general debate with the time to be equally divided between the majority and the minority of the Committee on Financial Services. And further, I request that the rules provide any necessary waivers for consideration of these bills. H.R. 830, the FHA Refinance Program Termination Act, would rescind all unobligated balances made available for use under this program. More than $8 billion in TARP funds have been set aside for the FHA Refinance Program, and $50 million have been dispersed since September of 2010. For this extraordinary investment of their money, taxpayers have thus far gotten very little in return. The administration originally estimated this program would help between 500,000 and 1.5 million homeowners. However, only 44 loans have been refinanced and only 245 applications have been submitted. This program has been plagued by problems from the start. Borrowers are frustrated that few lenders participate in the program, and it is difficult for borrowers to even find out if their mortgage servicer has agreed to participate. Rather than continue to spend money we do not have on programs that do not work, Congress should focus on creating the certainty job creators need for economic activity and hiring, and that means we must root out wasteful government spending on ineffective programs such as FHA Refinance Program. The other bill approved by the Finance Services Committee, H.R. 836, would terminate the Emergency Mortgage Relief Program and rescind any unobligated balances created by the Dodd-Frank bill which established a $1 billion fund to provide loans or credit advances to borrowers who cannot pay their mortgages because of unemployment or reduction in income. To date, no funds have been provided to homeowners under this program, and serious questions remain about its cost, effectiveness, and benefits. In its fiscal year 2012 budget proposal, the Obama administration estimates the program will have a 98% subsidy rate, meaning that for every $1 loaned under this program, 98 cents are not expected to be repaid. Given the country's current fiscal situation, no program warrants funding when benefits are speculative at best and substantial taxpayer losses are certain. So thank you for your consideration. I'm happy to answer the committee's questions.
Thank you very much, Ms. Biggert. Mr. Frank? Ms. Biggert has just requested a modified open rule, which this committee is considering, which obviously would allow for any germane amendments to be considered, assuming they'd be filed in the record tomorrow evening. So just wanted you to know that's what we're considering.
Thank you, Chairman. That sounds reasonable to me. I obviously disagree substantively. I will say this program is an extension of an existing program in the under the TARP program. About $7 billion, I believe, has been made available for a number of programs, one of which, the most of that money has gone for a program that's same as this program. It actually came out of Philadelphia, which they did a few years ago when our colleague, Mr. Fatah, called it to our attention. And we have a lot of people who are in trouble because they took out mortgages they never should have taken out. But this deals with people whose primary problem is that they took out mortgages and then became unemployed. And it's been done in a number of states. We have quotes from, example, the governor of Jersey, Chris Christie, hailing the program, the new governor of Alabama, and Governor Schwarzenegger all saying it worked well. It was originally, by the administration, confined to the 17 states which had the highest percentage of foreclosures. We thought that it should not be so confined, and that while there was a greater concentration of the problem there, it ought to be extended to other states. So this $1 billion essentially does for the other 33 states, at a smaller scale, namely with fewer people, what had been done with most of the funds made available. Those funds had some other purposes, but this is a part of it. So that's the issue, and obviously it's one we will debate on the floor tomorrow.
Thank you very much. Mr. Sessions.
Thank you very much, Mr. Chairman. The gentlewoman, Mr. Frank, was speaking about the program. I don't know the name of it, but the loan
Well, there's two different programs.
Right.
Right. There's
Two-
the FHA Refinance Termination Act, and then there's the Emergency Mortgage Relief Program Termination Act. And if I might just correct for the record, I did say as to the second program that I said the Obama administration estimates the program. I meant to say the CBO estimates the program to be, will have a 98% subsidy rate. So I'm sorry to interrupt you.
That means taxpayers would pick up 98,
98%,
expected to
so,
pick up 98%. Two of the figures that you used, then, Mrs. Biggert, that I'm sure the chairman, former chairman Frank is aware of, is it was an $8 billion program, $50 million's been used, and without mixing which program, you might want to go back on that with me. And 44 loans thus far have been issued. Is that a stunning success, or would you consider that a stunning failure?
I don't consider it a stunning success when the administration estimated that they would serve between 500,000 and 1.5 million homeowners. And I know that there was one amendment that wanted to cap it at 500,000, but we've only had 44.
44. That's
There
not
was
mis-
40 as of the end of last year, and
Oh,
4
40.
have been done since then.
4 this year.
It's a new program, and that's why they're starting it carefully. It's $50 million has not been spent. What you have was, it was $8 billion set aside out of the TARP. We now have a deadline. No new money can come out of the TARP. The $50 million has been set aside as a reserve to be used if there are losses going forward beyond what the FHA ordinarily has. So none of that $50 million has gone to anybody else yet. It is in an account that's there if there are losses. And it's true, only 40 some odd have come so far. There was one glitch because the bank regulators were telling people that they thought it wasn't, that they would write down what people, they would make the banks write down the value of the loan even beyond what they did. That's now been worked out. This program will become very important if there is a deal worked out. There are conversations going on now with the bank regulators, HUD, and all the attorneys general, Democratic and Republican, trying to come up with an agreement with various of the mortgage servicers, who include the largest banks, to try and reduce foreclosures. And if that deal works out, and I am hopeful that it will, one of the things that will be a part of it will be this FHA refi program, that you will see the banks, which have been reluctant at first because they weren't sure how the control of the currency was going to deal with it. The expectation is, if there is a deal, that the banks will be very much interested in participating. This would be part of the deal. So it's a startup, and nothing has happened much with it yet. But we anticipate that if this deal goes through, as I hope it will, and I think it will be very helpful, it will then become a major instrument.
If I might say something, part of the problem, well, the program is to last until the end of 2012. But even the Commissioner Stevens for the FHA is trying to reduce the amount of loans that are made by FHA and have the private sector take over more of these loans. And this program is creating a serious liability, I think, for FHA because they are now below the reserves that they're supposed to have, which is supposed to be 2%, and they're down to 0.5. So this is a problem for them, and then makes a problem, of course, for the taxpayers.
Yeah,
liability.
That's where the $50 million comes in. The $50 million is set aside from the TARP so that it would reduce the amount the FHA would be exposed to.
Well, I appreciate both of you being here. I'll tell you, with a $230 billion one-month deficit that the country experienced, the largest single-month debt in the history of our country, I would think that it's time to terminate these programs. For the 44 people that gain the advantage of them, great. For the guests that the Attorney Generals may want and need it, I think $8 billion is an outlandish program, and that we should expeditiously move forward and have the guts to say, sorry, can't afford that, for the other people who might want to rush in line to get that done. And
Well, I personally prefer to begin to reduce that deficit by bringing home those 50,000 troops sitting in Iraq in a supposedly non-combat role doing God knows what. And the $1.2 billion that we are just voted for the Iraq Security Force, in which I must say I have very little confidence. So I agree we need to reduce spending. I think our debate is over how and where, and not whether.
I appreciate the content from the gentleman. The facts of the case are we've got $8 billion here, and that's before the committee today. And I think that we've got to use not only our latitude here, but also our brains. And I appreciate both of you being here. And Judy, I appreciate the content of your argument. I yield back, Mr. Chairman.
We have a total of 4 of these bills that deal with mortgages to be
Two
done away with.
today,
2 today, 2
And
next
then
week.
we're marking up 2 tomorrow. That'll be on the floor next week, presumably.
Okay. Is anything to take their place, or we're just going out of the mortgage help business? Is that basic?
Well, there are still other programs that we have not looked
Which
at.
ones? I'm not aware.
We've got the Hardest Hit Fund, HHF, and we have the Hope for Homeowners, H4H. We have, I guess, HARP is also the Home Affordable Refinance Program.
Well, the Hardest Hit Fund actually is not a separate program. The Hardest Hit Fund is the fund that helps the unemployed, mostly. Most money goes. And that's the one, the Hardest Hit Fund, it operates in 17 states. So the $1 billion would operate that in the other states. So for the states, for those other states, there would be no replacement. The Hardest Hit Fund is confined to the 17.
18 states.
Or 17 in
Within the
District of
state.
Columbia.
Yeah.
If you want to give them
Okay.
statehood, I'm with you, Judy. But I don't know that we got the votes for it.
No, I don't think so.
But
right
it's
now.
17 states in District of Columbia. On the HARP is a Fannie Mae Freddie Mac program, which they deal with. The Hope for Homeowners is a nice program. It's a volunteer program with the banks. It hasn't done very much.
Why did these 4 programs not work? The banks were not cooperative?
Well, no, they are working.
Nobody
The hardest-
applied? Is that, all we've heard about is mortgages underwater, but people did not apply.
Well, 2 of them are new programs. So they in fact,
Well, the emergency, let's take the emergency program. And this is for 12 months or extension to 24 months, so that a homeowner that's underwater can get a loan, supposedly, a loan to be able to make their payments for an
Or
extended work of
modification
time.
in payments? maybe?
Well, it's to make the payments. This is more, but the problem is, not only do they, if they're unemployed right now, how are they going to be able to stretch out and make, take another loan? It's going to be more money, and maybe there'll be a modification, but it still will extend that, and then within 5 years they will get reimbursed. And that's so this is not a loan program. This is a grant program from the taxpayers.
well, could I just say, though, that there's a little contradiction here because one of the programs the gentlewoman said, presumably supportively, was going to keep going was the Hardest Hit Fund. But that's the same program, essentially. The Hardest Hit Fund
Yes,
is...
but that's done by the
I'm-
state, sorry.
Yeah.
Yeah.
The Hardest Hit Fund, if it's a bad program for 33 states, why was it a good program for 17 states? I mean, it's the same program.
Well, we haven't looked at that one yet. We started with the 4 that we thought we should look at first.
Well, that's mostly because it's already been spent, the hardest hit fund.
Given
And
the evidence that we
Excuse me, but the gentlewoman said she hadn't looked at it, but then why would you cite it?
I said we have
You
not
cited
brought
it,
that up yet.
But you did
Well,
you
somebody
did
asked
bring it
what
up.
programs that there
Right,
were available,
and
and
you cited
this is
that, I
still there.
assumed, as a
No,
program
not
worth
that it
having.
necessarily works, though.
Oh,
only
it
that
was
there
still
are
there,
other
but not a good
programs.
one. You forgot to say that.
Okay.
I was just going to say, that given the evidence that we seem to have that so many banks screwed up in mortgages and
Well,
took
what's
homes away
interesting-
from people totally illegally, it seems to me that we're going to need to make sure that they have some recourse.
Well, and I think that's important, but if you look at the numbers, there have been 4.5 million homeowners that have had help. That's 4.5 million, and 3.5 million of those are from the private sector. And I think if the private sector can do it, then that's where it should be, and not on the backs of taxpayers. And so, the numbers show that the private sectors have been able to do a lot more.
No, I agree with that, where the private sector can do it. When people want employed, that's not really something the private sector has been able to take on. And it's, again, I do, the hardest hit program that the gentlewoman cited is the prototype for the billion. We've spent about $7 billion in that already, and I think it's worked rather well. As I said, the governors of New Jersey, Alabama, former governor of California have all been very, among others, supportive of it.
Well, Mr. Chairman, may I ask unanimous consent to put the administration's policy in the record? And they are recommending veto. No further questions.
Thank you, Mr. Chairman. Thank you all for coming. I'm sorry I didn't get a chance to bring this article that I read. I think it was in the Washington Times a few days ago. Ms. Biggert, did you see the article that I'm talking about?
No.
Well, it was about the HAMP program, and I don't remember the exact numbers, but they stated that more people were hurt by this program than were helped by the program.
That is the program that we're going to be marking up tomorrow. So there is a lot of concern about that also. And here's the, I've seen this one. I didn't think that you were, that there was, I thought maybe you had another one that didn't.
Okay, so that's a different program that we're talking about.
And there's been a lot of controversy over that. That they, for example, the borrower goes to the servicer, and they say, well, we'll allow you to take a temporary pay down on your mortgage while we look to see if we can modify it. And that's fine, but then they wait several months, 3 months, 4 months, 5 months, 6 months, and they say you've paid the lower part, and then they come back and say, well, you don't really qualify, right. So you've got to repay the difference in your loan. And I've had this happen in my district. Mm-hmm. You've got to repay the balance back, and then you're going to have to pay a penalty because you didn't pay on time, and then you've got to pay a late fee because you didn't pay on time. And one of my constituents, it cost $42,000, and they didn't, since they were already right. not being able to manage paying that and the refinance, that they went under.
Well, the example that was used in the article that I read was a person who was told, we want you to pay less, and then when they finally told them no, they wouldn't pay their loan, they owed over $10,000 and they couldn't pay, and then they lost their house. And they said more people have been told that and lost their houses than were helped. I wanted to ask a question about the H.R. 830. According to our notes, $50 million of the money has been dispersed, but only 44 loans have been made.
None of the money has been dispersed, but there has been no payout. Because that money, as Ranking Member Frank said, is to hold it in case there is a default.
Okay.
So
but what I'm curious about is, are we backing up loans of more than $1 million each? 50 million, 44 loans. That's my point. Mr. Frank said they hadn't been successful because it was a new program, but I think the average American would be appalled that either that's what it's costing us to administer this program, or that's how much we're underwriting. What's the maximum amount that is being allowed to be underwritten, Ms. Bigger?
I don't think
Do you
there's a
know?
limit on that, according to the way it's done.
Mr. Frank?
There's just no relationship between the 44 loans and the $50 million. It's not $1 million a loan. 44 of the number of people who've applied so far who have gotten loans, none of them have defaulted yet. The $50 million is unrelated to the 44. The $50 million is set aside as a reserve for the entire program to cover losses of the FHA beyond what its own reserves could cover. So none of that $50 million has gone to any of those 44 people. They're just two totally unrelated issues. As to the maximum...
Well, it's not unrelated because if...
I'm sorry,
if
Judy,
it
may I
failed-
please?
Oh, go ahead.
The $50 million is unrelated to the 44. It's a reserve. It has no numerical relationship to the 44. If they were, and by the way, there is a limit on the FHA. What's the FHA underwriting limit?
700.
Yeah, there is a, the FHA is limited, I think it's $700,000. Yeah. But so but that's $729,000 in only a few counties. It's 400. Remember, the FHA limit is the median income. And so it's 417,000 in much of the country. It will go up to 700 in some parts of California, Massachusetts, a handful. So the limit is 700 anywhere in the country. In most parts of the country, it's more like $417,000.
Okay, well, I wonder if
But just let me remind you that the FHA has a statutory reserve requirement and that they are above what they, or below what they should be requiring now, so that this money was...
That's what the $50 million is for, so it doesn't come out of them.
Is there anyone who could tell us how much has been spent on administration for this program as well as for these 44 loans? Because something has been spent on this program other than the reserve, I assume, that Mr. Frank is talking about. And the notes we have say $50 million has been dispersed.
Yes, into the
For the-
reserve.
Out of the $8.1 billion
Right.
that has been
The
obligated to
$50
this
million was
program.
dispersed into the reserve.
And
That's
are
it.
they using that to run the program,
No.
Mr. Frank?
No, it is a reserve
Okay,
in case
well-
there are loans.
well, my
I will get you
question-
how, it's being run under the regular FHA budget. I don't know if they could break out how much is just for this. We can get you that number, but it's some small percentage of the overall FHA operating budget. But it's got nothing to do with the $50 million.
But if this program continues and would, which I don't think it can reach, but if it got to the 500,000 or the 1.5 million that was expected, there would be 8.1 billion that is in reserve for that.
Well, my point was, it seems to be an
Which we don't have.
extraordinarily expensive program based on the numbers that we've seen. And I agree with Mr. Sessions that with the largest deficit ever in the history of our country last month, we have got to do something to stem the waste, fraud, and abuse, if nothing else, that exists. And this seems to me to be a very wasteful program. Thank you very much.
Thank you. I agree as well that we need to do something about waste, fraud, and abuse in government. And I can't for the life of me figure out why we don't go after some of these oil subsidies that I think are totally uncalled for. I agree with Mr. Frank on the cost of these wars, and there are a lot of no-bid defense contracts that we should be going after that somehow seem all protected. In the debate about balancing the budget, unfortunately, it always seems that we're balancing the budget on the backs of working-class families and low-income families. And this, to me, what bothers me about what we're doing here is you're coming up and eliminating two programs that I'll grant you need reform. But you're not reforming them. What you're saying is we're throwing it all out and we're substituting nothing. And I got to tell you, I mean, the issue of foreclosures and is a huge issue all throughout the country. And the idea that you're saying, well, this is not being run the proper way, so rather than reform it, we're going to get rid of it. And then we have the process. And you're asking for a modified open rule, which on one hand sounds really nice, but if someone has a good idea as the bill is being debated, they won't be able to offer it. But if I'm understanding this correctly, the way this bill is written is that if I wanted to offer a reform, that I would have to find a germane offset. to pay for that reform because you eliminate both programs. So in other words, I can't change things, through a simple amendment. I'm going to have to find an offset that is germane in order to make any changes or any reforms to this program. Am I right on that?
Well, as I said before, with the 3.5 million mortgage modifications that have already been made by the private sector, there's always that, and we don't really need legislation to do that.
Well, if in fact somebody had a good idea to make these programs run better and provide more relief to more people who are in need, it's not just a matter of them offering an amendment with that idea. That the way this process is going to unfold is that person will also have to find a germane offset to pay for it. So, I mean, I don't know. It makes, in other words,
You're talking about the cut.
I'm talking about, yeah, it makes it almost impossible for somebody to want to reform these programs and make them better. What you're saying is you're adding in other words, you're talking about a modified open rule, but you're adding an additional burden to anybody who wants to change anything by saying you have to find an offset somewhere.
I think that our
That's germane.
committee would always welcome ideas to do this.
Again, I mean, here we are. It's a Tuesday. We're bringing this up on Wednesday. Trying to find a germane offset, is going to be very, very difficult. If somebody has a good idea, we're not giving them very much time to try to find an offset. I mean, this is not just. I guess what I'm trying to say, it's not as simple as saying, if someone wants to amend this, it's not as simple as saying.
I think you have to.
We got to find an offset.
You're being unfair. You have till Thursday.
Are you right?
Yeah.
I think you have till Thursday.
I have till Thursday?
Yeah,
Okay.
not tomorrow.
I'm sorry, I have till Thursday.
Beat them.
Still very, very difficult. I mean,
But, we have had
look,
these,
this is not just a unique problem to this legislation. I mean, we dealt with the continuing resolution. We weren't able to get at farm subsidies or subsidies to oil companies because of the way the bill was written. Here, the process is that if you want to change anything, not only you have to find something germane to change it, you have to pay for it as well with a germane offset. Yeah.
Well, can I say, again, we were able to get farm subsidies. The members were willing to vote for it. There's been a lot of concern here about a $50 million reserve, but many of the members here, I think, voted to send $150 million a year to Brazilian cotton farmers, which is not going to be held in reserve, except if you're a Brazilian cotton farmer. So we did have a chance to cut $150 million, and the majority voted to send it to Brazil.
I guess I just want to make the point that if somebody wants to reform these programs and make them better,
Well,
it's really almost impossible for them to do the way this process is being brought forward.
well, we've known for a while that these programs weren't working, and, it's March now, and people could have brought forward ideas for other programs. We're all, all of our agencies,
I mean, with
all of our.
respect,
Oh, okay.
that's not a reasonable answer.
Well, but either is it to say, well, these other things that be done, sure, and we probably, need to look at the Brazilian farmers, all farms, everything.
voted on
It
that.
has to be everything.
We're late for that. We voted on it 2 weeks ago.
All I'm
Well-
saying is, for those of us who believe that we can do more to help people who are in difficulty, that perhaps we can streamline or make these programs better and reform them.
But-
the way the
okay.
process is that in order to do that, not only do I have to have a germane idea, but I have to have a germane offset to be able to pay for it, which
Gentleman,
is
yield.
almost impossible. I yield to the gentleman.
I would guess that this, if it gets to the Senate, will go to conference, and I would encourage the gentleman to take the time, since he's very interested in this issue, over the next 15, 20, 30, 45 days to thoughtfully come up with those ideas, and I bet that somebody would be pleased to get you on the conference committee.
We are at a tipping point in our economy, and we want to make sure that we do the right thing. And, this is a
I do
problem,
too.
that it's ineffective,
There-
but we also are hurting these people that are trying to
There are a lot of people
refinance
in
their
trouble,
mortgages.
And your answer is to get rid of this entirely and do nothing in return.
No, I
And all
don't-
I'm simply
I
saying
don't
is
think
for those
that's
of us who may have some good ideas, Mr. Cardoza has an idea. The way this process is set up, it's almost impossible for him to be able to
The gentleman.
We want people to find a job. not to have to keep trying to get a loan or a grant to keep their mortgage. What we need to do is concentrate
I
on
would suggest don't
on
cut
creating
health grant money,
jobs.
don't cut worker training money, all the stuff that you did in the continuing resolution. I'll yield to the gentleman from North Carolina.
Is there anything from preventing you or any other member from introducing an entire bill that would fix this program? It doesn't have to be done through this process. You make it appear as though this is the only possible way to do this.
Well, I guess I have a good idea. Let's make Mr. Cardoza's amendment in order, and that, I think, would be a reasonable step toward openness and fairness, and I hope that when he testifies that everybody will agree that, that's a good alternative.
But the gentleman didn't answer my question. Is there anything that prevents you or anyone else from introducing a bill, a standalone bill, to take care of what you suggest needs to be taken care of?
And my answer is no, there is nothing, but what there is you that will prevent me from being able to bring it to the floor and be able to even bring it as an amendment. So I thank the gentlelady for her comments, and I have no...
Thank you again for both being here. I know Mr. Frank said that he didn't know the administrative cost of this. I assume it's run in the overall budget, but could find that out. Ms. Biggert, I don't know if you had a chance to answer that.
No,
Do you happen to know what the
don't.
administrative
I don't
cost of
have
this
that.
program?
It's the same thing. It's run, as of now, it's part of the FHA, and it's not much yet. It will be obviously expanded if it expands. It's in the startup phase. It doesn't cost, I don't think, anything incremental.
And so no one
Well,
knows
it's been since September.
and no one knows the exact dollar amount that these 44 loans would be cumulative. Okay.
We could find out.
Thank you. If in part of the notes we have here, it says that if this were to be terminated, it would reduce the federal budget deficits by $175 million over the 10-year period through 2021. To what does that number relate? How is that number
I
arrived?
assume the estimate of the losses that would come, which this is on the
I'm
FHA.
talking 830. I'm sorry.
Yeah, that's the. Is that the FHA? Yes.
Yes, that's
The assumption is that that's how much would be lost over the 10-year period. That of the amount lent, $175 million would be the total amount not repaid.
That would be from defaults on these loan programs.
Right,
is that
exactly.
correct? So then I guess the question I have is, to what extent is this entire program subsidizing poor financial decisions, or in some case, just simply outright irresponsibility by both lenders or borrowers, and shifting the amount? I mean, do we have a kind of concept of the proportion of these types of loans? I'm assuming if you're making the assumption that $175 million would be defaulted, there has to be some element of how many of these loans are probably bad risk in the first place, bad decisions.
Oh, no question. I think, yes, with this program, unlike the other, the unemployed, that doesn't apply because these are people who lost their jobs and made good loans. In this case, yeah, both lenders and borrowers made bad decisions here. And the calculation is that the total cost of the society of these foreclosures is greater than what would be involved in the subsidy. That's a very legitimate question. The cost to the cities with property that's not foreclosed, the reduction in property values that comes when the neighbors are foreclosed. So yes, this does subsidize, or tries to reduce through a subsidy, the economic impact of a lot of bad decisions by both borrowers and lenders.
The CBO savings, as you said, is $175 million over 10 years. That's from the CBO. For the FHA refinance, for the emergency mortgage relief, the CBO savings is $840 million over 10 years.
Right. So
The program. And when you talk about the decisions, I think if you go back to all of the housing, what's ever happened, the housing bubble, there were an awful lot of people that made a lot of mistakes. And so what we have to do is to move forward, to get people back, to get a job, to get the economy going. And, but there were a lot of bad decisions.
So the 44 that have been financed already, the 245 applications, my assumption would have to be that they were all poor decisions in some way by somebody.
No, not all. So, I mean, it's a combination of factors. In some cases, you had people who had illnesses. In other cases,
Death.
I mean, they weren't all bad ones. A large number were. they weren't all wrong. And then there was this also, in this sense, there was a drop in the value of housing in general, not just subprime, that was foreseen by very few people. So some of it is simply that housing in general dropped. People thought they were able to move, sell the house, et cetera. The general drop in housing prices, which I don't think you can attribute every individual bought a house at a certain period made a mistake in that those people didn't anticipate the severe drop in housing prices in general, but I think that was a fairly widespread mistake.
So
There are, the traditional reasons for losing your home, and
All
that
right.
would be losing your job or losing your life or losing, your family member. Those kinds
Well,
of
people
things you
moved
can- and move.
People bought and they moved, they're going to be able to sell the house and pay it off. And then the general drop in housing prices left some people stuck because they now owed more than the house was worth because of, in some cases, because of a bad decision, but in other cases, because of a general drop in particular regions of the country in house prices.
I'm making the assumption again that because this is a new program, the ability of actually tracking accurate numbers as to what the causes of these would be impossible to calculate.
Right, you don't know yet which ones they are.
Thank you.
Except
You-
for the CBO making the,
Well, that
The
goes to the
assumption
dollar
is-
amount, but
Right,
not the
yeah,
causes.
right,
He's right about the causes.
All right, I yield back.
Mr. Chairman, Mr. Frank, and Ms. Bigger, thank you both. And the whole Financial Services Committee, both under Mr. Frank's chairmanship and now under Mr. Balkus's chairmanship, have been very active and has kept the Congress busy at times when other committees were not as active. And I say that to genuinely signify my appreciation for the hard effort that you put forward. Ms. Biggert, you and I, as co-chairs of the Homeless Caucus, as a part of our personal passion in our communities, we're going to have a lot of work to do. And my question to both of you, and I'm really kind of seeking understanding, not being an economist, recognizing the complexity of all of the things that are discussed that gave rise to the boom and the bust and the bubble. How is it that people don't see the housing crisis today as potentially causing this country a double-dip recession?
Well, I don't see it as causing a double-dip recession, partly because whatever you think about prices, I don't think it is conceivable that you're going to have a drop nearly as much as you had before. Secondly, there are counter-cyclical forces at work, and people who've laid off, companies are very lean. Productivity is up, partly because they've learned how to do with so many fewer. Inventories have been down, but mainly because I think we had all these, for instance, the financial institutions, most of the losses they're going to take have already been taken. That is, you're just not going to see a repeat. People have learned. There may be some other mistakes made in the future, but you're not going to see this kind of over-lending on housing, I believe, that you saw before.
I think what we see, too, is that there are companies that are sitting back with a lot of money to be spent, but because of the uncertainty in the economy, that they're waiting to see what's going to happen. And I think
They make more money by foreclosing on a home than they would in working out a mortgage or modification with a person that may very well be able to stay in a home, or if a modification were.
Well, I think that's true, and I think that's why there's been so many of the private sector that have done the modification as well as what has been done in these programs. Because it hurts not only the lender and not only the borrower, but it hurts the community. It changes the value of homes, not just those that are being.
I may have misunderstood your question. I thought you were asking exactly the opposite. I thought you were saying that they make more money from foreclosing. I may have
Do
misunderstood.
they?
No.
It varies in the individual case. Sometimes
see.
yes, sometimes no.
Well, I guess
It depends. Well, part of the problem we have is we have had the system that I hope is going to get fixed going forward, where A makes the loan and then sells it to B, and then C does the servicing. And one of the problems you have is that there is no one individual that's involved, one entity.
Right.
There are different parties of interest, and in some cases, one party will benefit from the foreclosure and another party will lose, and there are second mortgage holders. Going forward, I think there was unanimous agreement. We have to get a better system.
Well,
but that's part of the problem now is that there are conflicting interests in the same loan.
Right. Well, however we get to the collective thrust of the present housing crisis, in Florida, 46% of all mortgages are underwater. And sometimes, anecdotally, we don't include ourselves. I have never missed a mortgage payment. The property values in the community that I live in have gone down. Florida has a recapture law that allows for 3%. I bought my home before the mortgage boom, so my prices for taxes are going up at the same time that the value of my home is going down. And if the value goes down a little bit longer, after 12 years of doing nothing but paying, or never missing a payment, direct pay right out of my salary that I receive here, my house will be underwater, as will my neighbors. Now, Saturday, I was driving to an event, and I saw an eviction, and I saw the agony of the police and the family. No beating on the family or anything like that, but the police officers were in as much distress as the family that they were putting out. And we sit up here and throw around nice terms and CBOs and all of those kind of things, and it's real people we're talking about out here that are seriously hurting, and I fundamentally disagree as to whether we're headed to a double dip or recession. If another 3 million homes go into foreclosure and we continue the present circumstances with reference to gas, I don't need any economist to tell me that we're getting ready to have a very rough time. And then there are two other things that are happening that I witnessed this weekend. In the newspapers, there's a whole category of entrepreneurs now that are buying up properties and flipping them and getting advantages and maybe sometimes disadvantages. But that's a whole other group of people. And more seriously, the strategic defaulters are beginning to show up. And I think what that means is the American dream is eroding very, very seriously. And the 4 pieces of legislation that are being brought may very well address some aspect of the deficit. But I find it hard to believe that 535 people sent up here to Washington, D.C. cannot do something to try to help the 5 million people in the United States who are about to lose their homes. Thank you, Mr. Chairman.
Thank you, Mr. Chairman. I want to associate myself with Mr. Hastings' comments. I've witnessed a couple of those evictions recently and had a number of friends foreclosed on recently. And it makes me angry. And it makes me angry that we have enticed a generation of Americans into home ownership who never should have been involved in home ownership. And I hope that the committee will continue to bring pieces of legislation that get the federal government out of the picking winners and losers business, where we pick home ownership as being the winners and where we allow folks to get back into making their own best decisions. When I look at these folks who are underwater and they put down the biggest down payment they could afford and they lost everything because somebody in Washington, D.C. told them it was going to be good for them if they would get involved in the home ownership business. And I see it over and over and over again in my community in North Atlanta. And it first do no harm. If we can have no other motto here, first do no harm to folks. And I appreciate the work you all are doing to try to unravel this little by little. in the committee, and I know that's a big order. It didn't happen on one person's watch. It happened on over decades and decades of all of our watches. But I'm grateful to you for doing what you can and being here today to do it.
You know, first, with great respect to my friend from Georgia, I think in most of these cases there was no one from the government that said, get in over your head. These were privately marketed loans and a lot of sales practices that probably shouldn't have been used. A lot of banks that, because they didn't have to retain any of the risk, were too quick to underwrite, package the loans, and sell them. I'll be happy to yield.
Mr. Polis, when you say they didn't have to recognize any of the risk and they could pass it along, I absolutely agree with you. But why could they pass it along? They could pass it along because the government created an entity that allowed them to pass it on.
Well, you were claiming my time. I think the issue was that there weren't sufficient regulations to ensure that some of the risk was retained and that these predatory practices weren't allowed. I think the existence of a pseudo-public entity certainly didn't help the situation, but I don't think it caused the situation either. I think there's plenty of blame to go around. There's an excellent report that was recently issued by the President's Commission on this topic, chaired by Phil Angelides, which I would encourage my colleagues to take a look at. Regardless, I think we all can agree that these programs are not working as well as they should. We still have a housing crisis. I think what we're doing, and what I fear we're doing again, is putting the cart before the horse, as we did with health care reform. We did repeal and replace. Well, we did the repeal part before we knew what was replacing it. So that's why I didn't have any comfort level with that repeal, and why I don't have any comfort level with this repeal. I think that we could think of much better ideas to help keep people in their homes, reduce distortions in the marketplace, than these programs. But what we are faced with is the existence of these programs or nothing at all. And to me, that's also an easy call. So I would certainly encourage, as we look at repeal and replace, that it's hard to take a leap of faith on repeal without knowing what replace looks like. I have an idea in this regard, and that was a bill I had last year. I'll be introducing again this year with support from both sides of the aisle, not in the jurisdiction of this committee, but rather in the Ways and Means Committee, which would be a capital gains tax holiday for investments in banks to allow them the opportunity to shore up their balance sheets. Any investments in banks would pay no capital gains tax. If that is held for 3 years, it would cause many banks to issue primary shares, improve their capital standing, their equity ratios. What will this do? Help get them lending again, increase real estate. And the reason you see banks doing funny things with regard to foreclosures in general, obviously, this is an oversimplification, but in general, it's because of balance sheet issues. That's what is causing banks to do that. So I think if banks had an incentive to shore up their balance sheets, that would go a long way. So again, I think there's many ideas that we could have that could very well improve these programs, replace these programs. But when we're faced with a vote of repealing these programs and leaving nothing in their wake to what is clearly a issue that the American people face that engenders some kind of public policy response, I'm really left with no choice but to oppose these repeals and I wish that we could do this in a more thoughtful manner, where we knew what we were looking at to replace these particular issues.
Yeah.
Yes.
I was just wondering if that you talked about a report, if they address the issue of the Community Reinvestment Act, because I think that's where we got into trouble in Congress with wanting everyone to own a home, the American dream, and if so that there were so many that really, should be renters for a while and weren't really ready to be in a home.
Let me say, I've long argued that, but to respond to your question specifically, the report that the gentleman references did get into the Community Reinvestment Act. 9 of the 10 commissioners said that the Community Reinvestment Act had nothing to do with the crisis because the Community Reinvestment Act does not say everybody should be a homeowner. As a matter of fact, those lenders not covered by the CRA had a worse record than lenders covered by the CRA. And among those who said that the CRA was not an issue was our former colleague Bill Thomas, chairman of the Ways and Means Committee, Douglas Holtz-Eakin, who was the major advisor to John McCain. 3 of the 4 Republican commissioners said that the CRA was not part of the problem. I forget who the third commissioner was. It was Bill Thomas, Douglas Holtz-Eakin, and I forget the third name.
And again, we are where we are, and there is different explanations for how we got here. But to simply repeal, in this case too, but I understand looking at potentially all four of the programs that are designed, albeit in a flawed manner, to address this situation without a thoughtful approach to what replaces them, to me would be very ill-advised for Congress, for the economy, certainly for the people who risk losing their homes, for the real estate market, and I think it's premature to move forward with a repeal without realizing what comes next. And with that, I'll yield back.
Thank you, Mr. Chairman. Both of these resolutions, it's troubling because the fact that, we keep going back to this. We have a deficit issue. It came up earlier in regards to the record-setting deficit just for last month alone. And no one seems to want to cut any program. There's resistance across the board when we start looking at the amount of debt that we keep piling up. We're using debtors' money to try to help people that are in debt, is really what it comes down to. We look at these programs, and as an employer and as a sheriff, where I had to do evictions, of course, none of us like doing those. And as an employer, I had employees that got themselves upside down, not only in car payments, but underwater in regards to mortgages that they purchased to buy a home at inflated values, because some were in the speculative market in regards to flipping homes. And particularly in Florida, it was a great pastime. But you hit it on the head, Ms. Biggert, when you said that the private mortgage companies in regards to loan modifications, and I had employees that came to me in tears because they had got themselves in a financial crisis. They had a job. They still got themselves in a financial crisis. And they were able to modify their mortgage after a lot of consternation. They looked at actually some of this TARP money. They, for whatever reason, didn't qualify, didn't get it. But they were able to go back to the private mortgage company and negotiate, because it really was in the best interest of the mortgage company to keep them in their home, because if they foreclose, typically they're not going to get the money that they had in loan to start with. I hear that across the board. The only ones that seem to win on this are the attorneys that are in, going to court as it relates to the foreclosures. So when we talk about where this country is and about jobs, we have to create jobs, not just try to bail people out of trouble. And it's unfortunate that folks find themselves in that situation, but these programs in particular haven't worked. I think that's the issue we're talking about. They just have not worked. And, my friends across the aisle talk about, well, it's true they haven't worked, but we need to, rework the program so they work. The problem is we don't have money to pay for them even if they did work. So that's the ultimate issue that we have, is we're using debtors' money to pay for people's debts.
If I might say, I think that the one thing, or two things that really we need to focus on is certainly financial literacy, and then the housing counseling, so that people don't get into these problems in the first place.
If I may, that brings up a great point, because I've had that, I had real estate folks come in to my office down home this last week, and they talked just about that, and it was from the Hispanic and Puerto Rican community, talked about education in regards to educating folks that want to get a mortgage, because a lot of people just don't understand what happens if you get into an adjustable rate mortgage. Today I can afford it, but tomorrow when the rates go up, I can't afford the payment any longer. And so, they don't understand that I can afford a house, but when I start to have to replace a roof, or if I have other issues going on, then all of a sudden I'm in trouble. And I agree with you. That would be a great idea.
I met with that group too, with the program. It's the Minority Realtors, and they offer a publicly funded mandatory first-time homebuyers education program. I'm not sure that would zip through the House, but that is what they are for. They are for mandating that before you can buy a house, you have to take a publicly funded education program.
Webster.
Thank you, Mr. Chair. I don't have anything other than I do like Mr. Polis's tax holiday for capital gains. I think that's a great idea.
Thank you both very much for being here. Appreciate it. The next witness is former Rules Committee member, Mr. Cardozo. Welcome back to the Rules Committee.
Thank you, Mr. Chairman.
If you have any prepared remarks, they will, without objection, appear in the record in their entirety, and we welcome your summary.
Thank you, Mr. Chairman. I'll try and move it along because having served on this committee, I appreciate your service. I'm glad I'm not any longer in that service, but what this committee does very important work, and I'm glad to be here, and I like the decor from California. I want to start out by saying a couple things. There are 37 million underwater mortgages in America right now. The 1.5 million subprime mortgages may have precipitated this problem, but most of them have been cleared at this point. And those 37 million underwater Americans are your friends and mine who work hard every day trying to make ends meet. And I will say very bluntly that I don't think the administration's foreclosure programs have worked at all. In fact, they have been an abysmal failure. Those of you who served with me on this committee in the last two sessions of Congress have heard me complain about that ad nauseum. And that's why I'm submitting this amendment today and offering what I believe is a far-reaching, economically responsible alternative to these failing programs. The housing crisis has reached a level that is worse than the Great Depression in both size and scope of economic devastation. Let me use my district as an example. Modesto, Stockton, Merced have the 3rd, 7th, and 8th highest foreclosure rates in the country. They have remained in the top 10 since the start of the recession. Some of my smaller communities face foreclosure rates in excess of 30%. Now, these are not all irresponsible people. These are not all people that didn't understand and needed counseling. When the value of housing drops 68% and drops below the cost of new construction, you have economic factors that are going on that are much greater than the need for counseling. And that's why I believe there's a role for my bill in the federal mix. The solution I propose is simple. The GSEs would be required, since we own most all these loans anyway, the bad ones, would be required to allow all homeowners the opportunity to refinance at a fixed single-digit market-based rate. This would enable homeowners with a Fannie or Freddie-backed mortgage to take advantage of historically low mortgage prices and to extend their mortgage to 40 years. This amendment would allow Freddie and Fannie to resell mortgage-backed securities to cover the costs of this refinancing, and the investors would get paid off at par value. Refinancing could save middle-income homeowners up to $1,000 a month, and it would free up money that homeowners could then spend on repairs and other immediate needs, boosting the economic recovery. This would also be a win for the U.S. taxpayer because ultimately all those homes with mortgages backed by GSEs become the debt responsibility of the federal government when they're foreclosed upon. My amendment will stop the domino effect that begins a foreclosure and ends with taxpayers being left with the bill. On a larger scale, this program would stabilize the housing market and by extension the economy by sharply reducing foreclosures, thereby establishing a floor on housing prices. Finally, it would help cash-strapped communities that are currently struggling to deal with their declining property tax bases. This amendment is timely, it's common sense, and it's desperately needed by our constituents. I'm well aware that this isn't a silver bullet, and it won't solve all our housing sector problems, but I believe the proposal is a foundation for future growth. 2 million additional foreclosures are predicted to be on the books this year, more than the previous year. The alternative to doing nothing is that millions of Americans will continue to lose their homes and our economy will continue to be held down by the lack of confidence in the housing market, which is on life support. My colleagues, this is simply an unacceptable situation. And I'd just like to add that I believe it's very important that as we debate these topics, that Congress, and myself included, update our knowledge on these issues, because where we started in this crisis with the subprime meltdown is no longer what's going on in the market today. And those areas that are affected, like mine, like Miami, like to the east of Mr. Dreyer's district, you get away from the coasts, and Middle America is having a really tough time. And my solution may not be the whole answer, but I think it ought to be in the mix. And I agree that the administration's programs haven't been working, and what we should do as government, part of getting efficiency out of our government is making sure that what we're paying for works. And I think that spending a little money in this kind of a program is a much better investment than spending in what we're currently doing right now. The fact that we've only had 44 modifications in that program is in and of itself a testament to why we need to make this change.
Well, thank you very much, Mr. Cardoza. Again, welcome back, and I will say that obviously we're very sympathetic. You're right. As I look to the east of the area I represent, I just had some people in from that area, and the unemployment rate is not as high as it is in your district, but it is still unacceptably high, and it has to do in large part with the issue of foreclosures. And I think that you have a very interesting and creative proposal. As you know, Mr. McGovern raised this as a concern. We are, at this juncture, looking to have the most open process that we can for consideration of this measure. And so I suspect that this committee is going to be reporting out a modified open rule for consideration of it. Now, you served 4 sessions on this committee, 2 Congresses, and I will tell you that during that period of time, there was no more eloquent case made to avoid the waiver of PAYGO than the arguments that you regularly propounded. And as you know, we've put into place this notion of focusing on reducing spending, and we have the cut-go provision. And I know that if the gentleman were on this committee, he would be equally troubled with the idea of a waiver, which is what your amendment will require. Now, what I would recommend is 2 things. First, to see if it would be at all possible for you, under this open process that we're going to have, working with the parliamentarian to see if maybe not the exact proposal, but some kind of language that can move in that direction could be in order under the open amendment process, number 1. And number 2, I would propose that you, as was pointed out by Ms. Fox earlier, this is not the sole opportunity to deal with this issue. We have 2 measures. They're going to be coming up next week. We have two bills here, and so we're obviously trying to find out ways in which we can ensure that people will not be hurt, but at the same time, get rid of programs that have been less than successful. And so I think that there may be an opportunity there, and so that's the advice that I would give to my friend. And again, I know that he was always very, very passionate in his opposition to the waivers when it came to the PAYGO issue.
Well, Mr. Dreyer, I think that this is a legitimate case for trying to make government work better and actually reducing cost. I heard the number bandied around that this bill's got $8 billion in it. We have had just very preliminary discussions with the CBO. We don't have a score that would work for the purposes of this committee, but I believe that the score would come in based on some conversations I've had below $5 billion. So if you eliminate one substitute for this, you'd actually have a savings of $3 billion and a program that would save millions of Americans their homes.
I think it's a very interesting idea. You're right. There are questions about exactly what the savings would be, and I would recommend that you pursue those just as diligently.
We have introduced this as a bill, freestanding bill. I've done it in the last 3 sessions of Congress. Mm-hmm. And I've discussed it with Mr. Bush's administration. I've demanded a meeting with the President. I've discussed it with him and his Treasury Secretary on many occasions. For whatever reasons, we can't seem to get traction, and then maybe that we'll have an epiphany in this committee and allow this bill to go forward.
Well, if we were to do it, I will tell you we wouldn't have the open amendment process that we have said that we want to have on this, because it would require doing what you, again, opposed vigorously up here if we were to do that. So I just wants you to know that we're committed to as open a process as we can. Mr. Sessions.
Thank you, Mr. Chairman. Dennis, thanks for coming and sitting in and listening not only to your colleagues, but also the ideas that are always a part of the Rules Committee. We have varied experience. We have backgrounds. We have ideas, which, as you know, we sometimes agree and disagree, even personally with in this committee. But the process, not just with the gentlewoman, Mrs. Slaughter, but also the gentleman, Mr. Dreyer, we allow open debate. The content, the intellectual quality, I don't know about the theater, but the intellectual quality occasionally from time to time is very good. We're faced with, in this country, enormous challenges. I don't need to tell you news about gasoline doing what gasoline is doing. The debt, people who are unemployed, homes underwater. I'm glad we're not screaming and yelling at each other. We're bringing our ideas to the forefront. We're trying to be thoughtful about what we do. And I'm pleased that you're here today to do that. I wish you were on the committee, but I would look at my colleagues and say, I'm glad y'all are here too. Wasn't room for everybody, but I know this is personally, and I remember some days when it was very difficult for you because you engaged people on the issue and they engaged you. So I think you're doing your job.
Ms. Slaughter.
Thank you, Mr. Chairman. Mr. Cardoza, it's good to see you.
Good to see you, Madam
I
Chair.
support your ability to offer this amendment with a waiver. I hope that we could see our way clear for that. If not, I hope that you and the parliamentarian can work something out. When I first came here in 1986, 87 actually, to start the term, the fastest growing population of homeless in the United States were children under 5. And one of the first pieces of legislation I did was to make sure they got educated. I learned then, and I know now, what it's like for children who lose their home, who are living in bands or wherever somebody will take them in. Just awful things it does to their psyche. For the life of me, I don't understand why it's better to have them living in cars with empty houses, sitting by the side. And frankly, I don't think the banks have been at all helpful in trying to get this done. But this very intriguing idea that you have. But I want you to have an opportunity to talk about that on the floor. I support that very much.
Thank you, Madam. May I respond, Mr. Chair? Thank you, Madam Chair. I still think of you as my Madam Chair, so excuse the reference, Mr. Dreyer.
Oh, I'm not offended at all.
The reality is that with so many folks in certain areas that are underwater, they need this bill intact. And the question of a waiver, I think, the reason why I need it is because if we modify the bill in order to comply and we don't have the full totality, then we are in fact going to have a program much like what the administration's doing, which suggests to the banks to operate instead of requiring
them to do it.
And so we really need the full effect of what the waiver that we're asking for would do, because if we modify the bill to come in with no dollars or to modify it so that we go and take money out of some other department that's germane, as Mr. McGovern was alluding to in the prior discussion, I don't think we'll get to goal. So in effect, if we don't have a waiver for this measure, I don't think we'll be able to bring it to the floor. Thank you.
It would be a shame.
Thank you, Mr. Chairman. And I, too, appreciate your coming in and bringing in a very thoughtful proposal, Mr. Cardoza. And I think we all are concerned about what this housing situation is doing to our country and looking for ways that we can make it better for the people who find themselves in this situation, either through fault of their own or no fault of their own. And I would echo what Chairman Dreyer has said, and that is to continue to look for ways that we may be able to come up with some measure to help people without adding to our deficit, without adding to our debt, because I believe that the people of the country want us to deal with that issue. And we've always had situations in this country where people have fallen on hard times. And most of the time, people deal with those and move on. You know, I feel like just the opportunity to live in this country provides us so much that people are not provided elsewhere. And because of the many, many opportunities we have here, people can recover. I mean, we know people from very low income people to very wealthy people who've fallen on hard times and yet been successful ultimately. So it's not the end of the world, I think, for people as long as they can continue to work toward resolving their issues. And I thank you for your presentation.
Thank you, Ms. Fox.
Mr. McGovern.
Well, thank you very much for coming. You know, this has to be a little bit of a. If somebody were watching this committee proceeding, and you know, I guess they can now with TV, they must be wondering. You know, we're told we have an open process, but you can't offer your amendment. We're told we have an open process, but the way this process is put together is that there are such enormous hurdles to find germane offsets, you know, to be able to pay for any reforms that it makes it virtually impossible to make any improvements on this. And but you do have the sympathy of this committee, which you can go back and tell your constituents that we're all very sympathetic, which is not enough. You know, look, I mean, these are serious issues, and it seems to me that when it comes to the foreclosure crisis, that the time to discuss your amendment or the relevant vehicle is now. I mean, I don't think it's relevant to talk about in the defense bill or the
right.
the education bill. It's now, and if we want to solve problems, we ought to be able to figure out a way to come together and allow there to be some alternatives made in order so that we can actually do something to improve people's lives. You know, I got to tell you, everyone talks about this is going to save all this money if we eliminate any aid to the people who are being foreclosed upon. The fact of the matter is you're going to create more homeless people, more people dependent on government. You're going to have more crime. You're going to, I mean, I go on and on and on. There is a cost to indifference, and there is a cost to turning your back on this, and there's a cost to simply saying that this is all this is a statistic. And so I appreciate very much not only your passion on this issue now, but over the years. And I think you have a good proposal, and I look forward to the time when we might be able to talk about it on the floor.
Mr. McGovern, thank you for that. There's 2 points I'd like to raise that you've brought to attention. Community building and the fact that folks who rent are good folks, but they don't stay in the community for a long period of time. Oftentimes they move location to location. That means they're not part of the Rotary clubs oftentimes, other things. And we, study after study, have shown the benefits of home ownership. Second point is we talk about the American dream. Well, the reality is even now, when home ownership has declined about 5%, we are in the bottom half of the industrialized world in people who own their home as individual citizens. And so our percentages are not high in comparison to others around the world. And so we like to talk about the American dream, but it's becoming a vanishing opportunity for more and more Americans.
Thank you.
Mr. Cordoza, could I just ask a question? What do you project would be how many of these home loans would be covered by your particular program?
Well, 37 million Americans would be able to refinance because they have mortgages that are backed by GSEs, and currently they can't refinance without putting in additional dollars to get that loan. So they would have to come up with additional down payment money.
So all 37 million would qualify?
If you have a government-backed mortgage, you'd be able to refinance at market rates.
So that was the question I had. Do you know how many of that 37 million do have government-backed mortgages that we're talking about?
37 million.
Or all 37?
Yes.
Okay.
It doesn't convince. The real problems with foreclosure, many of the problems that precipitated this were in the conventional home market that wasn't government-backed. The Fannie and Freddie never got in the subprime business, and that's not something that's well understood here in the halls of Congress.
The other program that is scheduled to be terminated if 830 passes puts 50 million aside for potential losses of that. Do you know what number you would have to have in your program?
We already cover the losses.
Okay. But you would not, you don't have a specific...
We don't have that kind of provision to do that, no.
The waiver that you're asking is a waiver on the dollar amount that we're talking about. It is not a structural waiver per se.
The waiver I'm asking for is the ability to present the bill on the floor. It requires an offset. What you're proposing...
So that's the issue at hand is though...
Well, you're proposing a cut. You're proposing an $8 billion cut. I'm for that. But I'm saying I think it's going to be around $5 billion. Now, I disagree with the CBO's preliminary discussions because the number one tax deduction most Americans take is their mortgage interest deduction. You reduce their mortgage interest payment and you save money, but the CBO, I'm told, doesn't score that savings. So if you really care about reducing the debt, this bill would actually reduce the debt more than the CBO score, and I believe it's revenue neutral or better, but I can't get that out of the CBO today.
There's a lot of things we can't get out of CBO.
Exactly.
But the issue still at hand is the financial issue that is here. It is not the structural issue of adding a program that expands something onto a program.
I think that's true.
So it's the financial issue.
Correct.
Thank you. I appreciate that.
Thank you very much.
I'll be very brief, Mr. Chairman. Thank you very much, my colleague, Mr. Cardoza. I believe I'm a co-sponsor of your legislation. If I'm not, make me one.
Okay. Deal.
I favor the waiver, and I am in support of the amendment. Thank you, Mr. Chairman.
Thank you, Mr. Hastings. Mr. Walker, I have no questions, Mr. Chairman. Mr. Foltz? Anyway, I'll seek time at this time. No one is seeking time. I want to thank the gentleman for
Thank you.
bringing his ideas, facing sometimes the reality of what we choose to do. I would don't have studied this, but it seems like to me that if we had a system whereby we had dynamic scoring, the gentleman would be able to seek going to using a system that then would be in place to prove that this could really help people and pay for itself. It would be very interesting.
I thank the gentleman, and I'd just like to say in closing that the gentleman may recall that Republican senators considered this proposal for some period of time as an alternative to the TARP bailouts of the banks, and ultimately didn't offer it forward, but it almost became a proposal in the Senate at one time. Thank you very much.
Thank you very much. This now concludes the hearing. I see no other witnesses or anyone seeking time. I have staff upstairs and bills. So, you ready to go, man? Okay, Chair will be in receipt of a motion.
Thank you, Mr. Chairman. Mr. Chairman, I move the committee grant H.R. 830, the FHA Refinance Program Termination Act, a modified open rule. The rule waives all points of orders against consideration of the bill. The rule provides 1 hour of general debate equally divided and controlled by the chair and ranking minority member on the Committee on Financial Services. The rule makes an order the amendment in the nature of a substitute recommended by the Committee on Financial Services, now printed in the bill. As original text for the purpose of amendment, provides that each section shall be considered as read. The rule waives all points of order against the committee amendment in the nature of a substitute. The rule makes an order only those amendments that are submitted for printing in the congressional record no later than March 9, 2011, or pro forma amendments for the purpose of debate. Each amendment submitted for the printing in the congressional record may be offered only by the member who submitted it for printing or their designee, and each such amendment shall be considered as read if printed. Finally, the rule provides one motion to recommit with or without instruction.
You've heard the motion of the gentleman. Any discussion or amendment? Mr. McGovern.
Mr. Chairman, I move the committee report an open rule for consideration of H.R. 830 so that members are able to have a truly open, free-flowing debate on this bill without the restrictions imposed by the rule in front of us.
You've heard the motion of the gentleman. Any further discussion? If not, the vote occurs on the McGovern amendment. Those in favor will say aye. Those opposed, no. Pay the chair. The noes have it. The noes have it. Clerk, call the roll.
Mr. Sessions? No. Ms. Fox? No. Mr. Bishop? No. Mr. Woodall? No. Mr. Nugent? No. Mr. Scott? Mr. Webster? No. Ms. Slaughter?
Aye.
Mr. McGovern? Aye. Mr. Hastings? Aye. Mr. Poles? Aye. Chairman, Mr. Chairman?
No. Clerk, report the total.
4 yeas, 7 nays.
And the motion is not agreed to. Are there further amendments? If not, the vote, Mr. Polis.
Yeah, I move the committee make the order providing necessary waivers for amendment number 1. I'll provide the gentleman. From California, Mr. Cardoza, which would require Federal National Mortgage Association and the Federal Home Loan Mortgage Corporation each to carry out a one-year program providing for the refinancing of qualified single-family housing mortgages that it owns or guarantees.
You've heard the motion of the gentleman. We've obviously discussed this at length. Would not be an open rule if we were to make this in order, so I encourage my colleagues to vote no. Those in favor will say aye.
Aye.
Those opposed, no. Pay the chair the noes. have it.
Recorded vote, Mr. Chair.
Clerk report.
Mr. Sessions? No. Ms. Fox? No. Mr. Bishop? No. Mr. Woodall? No. Mr. Nugent? No. Mr. Scott? Mr. Webster? No. Ms. Slaughter?
Aye.
Mr. McGovern? Aye. Mr. Hastings? Aye. Mr. Poles? Aye. Mr. Chairman?
No. The clerk report total.
4 yeas, 7 nays.
And the motion is not agreed to. Are there further amendments? If not, the vote occurs on the motion of the gentleman from Dallas. Those in favor will say aye. Those opposed, no. Pay the chair the ayes have it. The ayes have it. The motion is agreed to. Clerk, call the roll.
Mr. Sessions? Aye. Ms. Fox? Aye. Mr. Bishop? Aye. Mr. Woodall? Aye. Mr. Nugent? Aye. Mr. Scott? Mr. Webster? Yes. Ms. Slaughter?
Aye. No.
Mr. McGovern?
Slip back in my old room.
No.
Mr. Hastings? No. Mr. Poles? No. Mr. Chairman?
Aye. And the clerk report total.
7 yeas, 4 nays.
And the motion is agreed to. And this one is going to be, which one? This is, Mr. Bishop will be handling this one for the majority. And Mr. Polis for the minority. And the clerk will be in receipt of a second motion.
Mr. Chairman, I move the committee grant H.R. 836, the Emergency Mortgage Relief Program Termination Act, a modified open rule. Rule waives all points of order against consideration of the bill. The resolution provides 1 hour general debate, equally divided and controlled by the chair and ranking minority member of the Committee on Financial Services. Rule makes in order the amendment in the nature of a substitute recommended by the Committee on Financial Services, now printed in the bill as original text for the purpose of amendment, and provides that each section shall be considered as read. The rule waives all points of orders against the committee amendment in the nature of a substitute. The rule makes in order only those amendments that are submitted for printing in the congressional record not later than March 9, 2011, or pro forma amendments for the purpose of debate. Each amendment submitted for printing in the congressional record may be offered only by the member who submitted it for printing or their designee, and each such amendment shall be considered as read if printed. Finally, the rule provides one motion to recommit with or without instructions.
You've heard the motion of the gentleman from Dallas. Any discussion or amendment? Mr. McGovern.
Mr. Chairman, I move the committee report an open rule for consideration of H.R. 836 so that members are able to debate this bill with no restrictions.
You've heard the motion of the gentleman. Let me just say that it is interesting to me that this continues to be offered. In the last 2 Congresses, this would be an open rule based by the definition that you had. I know you're saying that you're going on our definition, which we very much appreciate, and you're welcome to. And I appreciate the supportive remarks that Mr. Frank, the ranking member of the committee, offered for this process that we're considering right now. He said he was supportive of it, so I'm going to encourage a no vote. Name of Barney Frank and the old process, I'd urge a no vote on the amendment by Mr. McGovern. Those in favor will say aye. Aye. Those opposed, no. Pay the chair the noes have it. The noes have it.
Mr. Chairman, I ask for recorded vote.
Clerk, call the roll.
No. Ms. Fox? No. Mr. Bishop? No. Mr. Woodall? No. Mr. Nugent? No. Mr. Scott? Mr. Webster? No. Ms. Slaughter?
Aye.
Mr. McGovern? Aye. Mr. Hastings? Aye. Mr. Poles? Aye. Mr. Chairman?
No. Clerk report the total. And the motion is not agreed to. Are there further amendments? If not, the vote occurs on the motion of the gentleman from Dallas. Those in favor will say aye. Those opposed, no. Pay the chair the ayes have it. The ayes have it. The motion is agreed to. And Mr. Sessions, clerk, call the roll.
Mr. Sessions?
Aye.
Ms. Fox?
Aye.
Mr. Bishop? Aye. Mr. Woodall? Aye. Mr. Nugent? Aye. Mr. Scott? Mr. Webster? Yes. Ms. Slaughter?
No.
Mr. McGovern?
Aye. And the clerk reports total. And the motion is agreed to, and this measure will be handled by Mr. Sessions, gentleman from Dallas. And for the minority, Mrs. Slaughter. Thank you all very much. Committee stands adjourned.